In the year 1897, the Revolutionary Government was founded, and together with it, the Department of Finance. President Emilio Aguinaldo appointed General Baldomero Aguinaldo as the first Secretary of Finance. The department's main function during this time was to finance the revolution, education, and health programs through progressive taxation. In 1901, the Department of Finance and Justice was formally organized, with Gregorio Araneta as the first Filipino-appointed Secretary of Justice and Finance. The department held office in Ayuntamiento along with the Supreme Court and the National Assembly. The department's main role under the American regime was to finance the government, basic services, and infrastructure projects. Then in 1916, the Department of Finance and Justice was split into two independent departments. From Ayuntamiento, the DOF moved to the new government center, the Agrifina Circle in Luneta outside Intramuros. The following year, the DOF helped set up the first stock market in Asia, the Manila Stock Exchange. With this development, the DOF was effectively laying the foundations of the country's capital markets. Then, in the 1940s, the Philippines entered the dark chapter that threatened to undo all the progress it had made. From 1942 to 1945, the war ravaged the country. Japanese soldiers took over the DOF building, Ayuntamiento, Aduana, and BOC headquarters, where they hid until they were flushed out by combined American and Filipino forces. The infrastructure damages during the liberation of Manila were catastrophic. For a time, the future seemed bleak, but the Filipino people displayed extraordinary resilience in the face of massive loss and setback. Rising from the rubble, the Filipino people marched forward. After the war, the DOF in Agrifina Circle was rebuilt. Rehabilitation efforts combined with the inflow of grants and reparations led to double-digit growth for at least a decade. It was amidst this post-war economic boom that the Central Bank of the Philippines, now the Bangko Sentral ng Pilipinas, was established. Miguel Cuaderno, who was then the Secretary of Finance, passed the finance portfolio to Pio Pedrosa to enable Cuaderno to serve as the governor of the central bank. The department was reorganized and its organizational structure, distribution of powers and functions, and coordination mechanisms were streamlined. Over the decades, the Philippines protected local industry from foreign competition through measures such as import tariffs and quotas. Successive governments imposed quantitative trade barriers, price controls, and subsidies. Infrastructure spending increased and state ownership of commercial enterprises became prevalent. In the 50s, the DOF caused the issuance of bonds up to 1 billion peso to finance a massive economic development program. Spearheaded the passage of a tariff act to improve revenue generation and protect the growing industrial sector, and pursued a stabilization program to curb the growing deficits which resulted from massive spending on the 3-year economic development program. By the 60s, the national government succeeded in stabilizing fiscal operations with the imposition of a margin levy of not more than 40% on the sale of foreign exchange. In the 1970s, the export tax law was enacted to check the worsening balance of payments problems. The political upheaval in the early 1980s worsened the economic woes brought about by the oil crisis and debt crisis that started in Argentina and other Latin American countries, and soon embroiled the Philippines, resulting in a deep recession. The DOF played a major role in the economic recovery effort by adopting a debt standstill arrangement with almost all its creditors and rescheduling with Paris Club countries and separate rescheduling with commercial bank creditors, tapping the IMF Fund Facility for BOP support, adopting a fiscal consolidation program, creating a GCMCC to avoid public corporate bankruptcies, dismantling of state monopolies, developing market-friendly policies. In 1896, Executive Order 93 removed all unnecessary tax exemptions and created the FIRB. The following year, the DOF adopted the privatization program. Bankrupt GFIs were also rehabilitated and the Philippine National Bank was privatized. In 1988, the value-added tax law was introduced, replacing a multi-rated sales tax. The macroeconomic environment vastly improved after the Economic Stabilization Program of 1991 and 1992. For this feat, the Philippines returned to the international markets after more than a decade of absence. Through the department's policies, which resulted in sound fiscal and monetary conditions, the Philippines was hailed as Asia's newest tiger by various international credit institutions. The year 1996 marked a milestone in the history of the Department of Finance, with the transfer of its operations from Agrifina Circle to the Rojas Boulevard complex. On its centennial year, the DOF achieved 4 consecutive years of national government budget surplus, a peak tax effort of 15.3%, a consolidated public sector surplus for the first time, and privatization revenues of 163.7 billion pesos for 6 years. A strong financial system and a decade of deregulation, liberalization, and democratization have enabled the country to better withstand the full impact of the Asian financial crisis than its neighbors. To avoid future crises, Asian countries responded with regional economic programs and enhanced cooperation. The DOF expanded the investor base for government securities, encouraging savings mobilization and deepening of the capital market through reforms in housing, finance, and pension fund systems. The department continued to pursue much-needed tax reforms, focusing on tax administration. By 2006, the Philippines had fully paid its IMF loans and started lending to it in 2011. Then a global financial meltdown started ripping through the real sector in 2008. Once again, strong fundamentals enabled the country to quickly overcome the global financial crisis which crippled US and Europe. By 2009, the Philippines had already re-entered the global financing market. Then in 2012, the DOF advocated for a landmark reform of the structure of state taxes, introducing indexation of the tax rates and removing the classification of seen products by price tiers, making all products subject to a unitary taxation. The following year, the country earned its first investment grade status from S&P's, Fitch Ratings, and Moody's. Fast forward to 2019, bold tax reforms and improved administration paid off as revenues rose to 16.1% of our gross domestic product, our best performance in more than 20 years. That same year, we also hit a historic low debt-to-GDP ratio. Then a worldwide setback threatens to reverse these hard-earned gains once again, this time a pandemic. Amidst the COVID-19 pandemic, the Bureau of Internal Revenue rolled out several modernization projects under its Digital Transformation Initiative. Aimed towards improving tax collection services, the efforts resulted in nearly 100% online filing of income tax returns for 2020, while 83% of total revenue collection was paid through electronic channels. Over the long term, our massive infrastructure modernization program will be the cornerstone of the country's recovery by generating new jobs and improving the quality of life in both urban and rural communities. As one of the lead agencies steering the implementation of Build, the DOF is actively securing the country's economic growth for generations to come. With nearly 70 million Filipinos now fully vaccinated, the country is well on its way to recovery. Many are hopeful that the coming years will bring greater mobility and the return to normalcy. As we build on these hard-earned gains, The Economic Development Cluster's 10-point policy agenda will further accelerate our economic recovery and restore the country's development trajectory. As the Department of Finance marks its 125th anniversary, the department continues to stand by its mandate of responsible, sound, and efficient management of the financial resources of the government to ensure every Filipino that their taxes are responsibly spent towards social development, infrastructure, and the overall economic growth of the country.